Hi, I'm Max Keiser. This is the Keiser Report. Well, let's go back to a secret, undisclosed location somewhere in the United States and talk with Stacy Herbert. Stacy Herbert, can you hear me there? What's going on?
Max, I can see you as well. You're looking great.
Oh, that's fantastic. Let's look at some of these big stories here. Stacy Herbert, is the commodities boom over? Talk to me about this one.
Yes. All of the newspapers, all of the television news shows, they're all asking, is the commodities boom over? They often call it a bubble as well. And here's a chart here from The Guardian. A plunge in oil and gold prices has raised speculation that the long boom is over. Do you agree? Obviously, the people participating in that online poll were a bit smarter than the headline writers at The Guardian. 40% say, yes, the boom is over. 60% say, no, it's not. It's going to continue. Because, of course, the correct question, Max, would have been, is the bear market, is the collapse of the dollar over?
Right, that's the inverse of this whole phenomenon. It's really a story about the collapsing dollar, and we've had a bit of a relative strength in the dollar recently on the pantomime going on in Pakistan. Let me ask you about this, what I'm seeing here. Jim Grant, the famous newsletter writer, he says that the current monetary system in the U.S., he calls it a collectivist, top-down tyranny. What's this about?
Yes, this was in a debate in New York City last weekend, and he called it, as you say, a collectivist top-down tyranny. The clever and the nimble, he said, play this system for what it is worth. Gold, he referred to as the people's money, and the dollar as America's credit card.
Well, that's exactly right. You've got this out-of-control credit card being wielded for every war. America says, oh, let's invade Pakistan, get out the American debt card. Oh, let's invade Iraq, use the American debt card. And, of course, every time they need to pay the debts, they just print more money, and the rest of the world is saying, wait a minute. Instead of getting all this worthless paper, we're going to buy real stuff like oil, commodities, gold, and silver.
Max, in fact, also at the debate was David Stockman, the former Reagan OMB director of the Office of Management and Budget director, said the gold standard wouldn't have allowed 40 years of deficits. And now remember, this is important to remember because when you're here in America, you see that it's a very partisan, very right, left, very red state, red state, blue state. They're all debating which one of these, whether it's liberals or conservatives, that caused the deficits. And they're all screeching about how to cut it. And it's trillions and trillions of dollars, and they're fighting so hard over $38 billion, when in fact the answer has been right in front of their faces the whole time, as David Stockman suggests, that with a gold standard, the people's money, the oligarchs and the kleptocrats and the elites could not have stolen so much from them.
Exactly right. And another big player, of course, is the Federal Reserve Bank. I'm looking at a headline here, how the Fed made the rich richer.
Well, Max, this is a headline from MSN Money, and it's an opinion piece, but it's an opinion that is right now being ignored as the commodities fell back a little bit on the way up to ever higher numbers. The QE2 project was supposed to ease borrowing and get consumers to spend again, but lo and behold, it has benefited only a few while raising most people's cost of living. And you see that in these rich lists, like Sunday Times rich list came out last weekend. The richest in Britain, all these billionaires, are almost at the same exact amount of wealth that they had at their all-time peak, which was right before the financial collapse. Of course, the bottom 99.9% are nowhere near. They're still down 20, 30, 40%.
Right, top-down tyranny. As opposed to bottoms-up competition. There is no ability to compete anymore. It's all been taken away by these top-down kleptocrats. Let's move over to Europe. A great favorite topic of ours is, of course, Greece and Ireland. Now, the European Union has said they're considering requiring collateral for Greek aid, some extra collateral. It sounds like they're moving in for the kill there.
Now they're actually requiring physical collateral, whether it's the Acropolis or the income stream from tourists paying to get into the Acropolis. Now they're saying that if you need extra money, and of course they knew from the very beginning that was how it was rigged, that they would need more money.
Oh yeah, it's a leveraged buyout or a hostile raid of a country to secure those income-producing assets using borrowed money that was borrowed using these assets as collateral to get the loans to take over the country. And this is what I don't think most Greek people understand. They are the subject of a Michael Milken-esque type hostile raid. At the end, all the assets will be sold off, and they'll end up with nothing, and a few people will pocket billions, and then they will have, of course, lost their sovereignty. Merkel's budget spokesman said, we'll just have to bite the bullet. We need to help Greece help itself. What's the alternative? We don't want to be pushed over the edge into restructuring.
Yes, we need to help them help themselves. Again, that's another thing that empire always did, Max. Think of the British Empire going down to Africa to help those people help themselves, help these pagans, help these barbarians. It's always about helping them help themselves.
Yes, missionaries of debt, spreading the gospel of being indentured servants for the rest of your known existence.
Max, I have a headline here to go with that statement. Here's how much German banks are on the hook to the periphery. So this is a great chart from Credit Write-Downs, Ed Harrison. German banks owed what? So Greece owes German banks 28 billion euros, which is not much compared to those other big balls of debt you see there. Portugal owes them 28.7 billion. Ireland owes German banks 114.7 billion, and Spain owes 146.8 billion. So I think what is important to look at when you look at Greece and you look at their assets and their sovereign rights now having to be used as collateral for these loans, what they're really worried about are these bigger states. They're telling Ireland and they're telling Spain, you know, we're going to take all your assets, just like we're going to do to this little puny country relative to you. If we can take it from them, we've set a precedence, and we're going to take yours.
Well, there's rumors abounding that Greece is going to default. The S&P, of course, downgraded Greek debt again, and now Greece is questioning the integrity of the S&P, as they should. So maybe we'll get a good old-fashioned dust-up down there in Greece. Hopefully the Greek people will win against the financial terrorists. Now, here's an interesting story. The UK faces £9 trillion of savings shortfall. What's this about?
Well, again, we're talking about top-down tyranny. So when we start at the top of the show asking the question, is the commodities boom over, i.e., is the fiat currency collapse around the world, is that ending? Well, you know, £9 trillion, which is, what, $14 trillion? Needs that there's a shortfall of that amount for people retiring. So where is that money going to come from? It's going to be printed, or older Brits are going to have to accept a severely reduced standard of living.
Yeah, it's similar to the peak oil story. I remember that story from a couple of weeks ago. I remember people were driving around looking for gas that was cheaper, some other gas station, until they ran out of gas. Then they were stranded, and then they had to call the AAA service to bail them out because they had run out of gas. Or they called 911 and said, I don't know what to do, I ran out of gas. So here you have all these pension systems. You've hit peak credit, you've hit peak economy. People have no idea how to prepare for this. It's just one day. There's no more money. So they have to hit the spigot, print. And, of course, this is what is telegraphing us in the prices of commodities, particularly precious metals.
Let's move on because, again, we're talking about the commodities. And there, aside from the money printing, there's also the matter of supply and demand. So let's look at the other big important commodity that drives the world, and that's energy. Iraqi oil production cutback plan adds to global supply fear. So Iraq has just announced that they're preparing to have its official oil production target, forcing companies including BP and Shell to renegotiate their contracts. So they're now setting a new target to produce between 6.5 million and 7 million barrels per day by 2017, down from the original plans to pump 12 million barrels.
That sounds like quite a haircut in the oil market for sure.
Yeah, well, they're also arguing supply and demand. They're self-interested. They're saying, well, if we pump, 7 million extra barrels of oil per day, that will drive the price down of our our finite resource that we're selling.
So whether or not the world recognizes peak oil, OPEC has recognized peak oil. Now they're starting to ration oil.
Well, yes, they're starting to think of their own self-interest in a new world that we don't know where these currencies are going to end. What will happen post-dollar collapse? And then I have one final headline here on the energy market, and it is a really good analogy for the whole financial system, the currency system. What toxins people are willing to think because they're kind of brainwashed, what they're willing to destroy their children's futures, their children's health, their grandchildren's health and futures. Frack and ruin, the rise of hydraulic fracturing. And this is from the Telegraph. And they're talking about inflammable tap water, cancer threats, and earthquakes probably coming soon near you. Fracking has been most vigorously criticized for the damage caused by its wastewater, which contains carcinogens such as benzene and radioactive elements such as radium. Some of these chemicals are in the secret cocktail of liquids injected in the well. So people, just like what goes on in the Fed, it's all secret. You're not allowed to know what toxic brew of assets are behind the U.S. dollar, backing the U.S. dollar, or backing the Fed and their AAA rating. You're not allowed to know that. And yet people are, like, their children are coming down with nosebleeds and nausea, and they're still allowing this to happen because they're being paid $1,000 or $10,000 for the right of fiat currency for the rights to drill under their land.
Well, that sounds like a dire situation of folks that don't seem to understand the value of their own life versus the corporate profits being generated at their expense. All right, Stacy Herbert, thanks again for being on the Keiser Report from some undisclosed location in the United States.
Thanks, Max.
Don't go away. When we come back, much more, so stay right there.
My name is Daniel Schmidt, this is Julian Assange. We're here to make a short presentation about the WikiLeaks project.
The first step in the fourth estate is to get information out about the real world.
Julian works on fear and on anger.
Secrecy is the biggest enemy of democracy.
If I ever put any sources in danger, he would hunt me down and kill me. This is exactly one of the reasons why we left the project. Because it has become more about this whole James Bond bullshit than about the actual information.
First, some thank yous to all the people around the world who have had faith in me.
Welcome back to the Keiser Report. I'm Max Keiser. And as promised, the man, the legend, Eric Sprott of Sprott Asset Management. Eric Sprott, welcome to the Keiser Report.
Max, very happy to be here, particularly because you've been such a stalwart in pushing people towards silver, which I think is the best recommendation anyone can make this decade. And I'm happy to aid and abet that cause in any way I can. All
right, Eric Sprott, you called silver the investment of the decade. I take it you still stand by that statement. Well, give us a rundown on where we are currently in the silver market.
Well, I've always looked at silver and gold as a situation where the demand will exceed the supply. And when I looked at gold in the last decade, we had a great change from the demand side where central banks used to be sellers and became buyers. We used to have no ETFs, now we have ETFs. We used to have mining companies would hedge, now they don't hedge. And the shifts in ownership have been dramatic in a market where we really see no rise in supply. In the case of silver, what really turned me on about 12 months ago was as we witnessed people buying silver, you realize that there would not be enough silver to buy. And as examples, the U.S. Mint today sells as many dollars of silver as dollars of gold. When you realize that silver trades at a 40-to-1 ratio, it means they're buying 40 times the physical ounces of silver as they're buying gold. When we sold our gold ETF, we raised $440 million. When we sold our silver ETF, we raised $550 million. James Turk of Gold Money, he sells more dollars of silver than gold. We have a little company called Sprott Money that sells gold and silver coins. We sell way more dollars of silver than gold. And so here we are in a situation where the price is 40-to-1, but the dollars going into it are almost dead equal. So I can't see the price ratio staying in this range.
All right, now, recently the price of silver got up to that all-time high of 50, didn't quite break it. Then a lot of things happened concurrently. First, Jim Rogers opened his fat trap and said that silver was in a hyperbolic move. And this seemed to get the hedge funds to start selling silver. But more importantly, this is what I want to talk to you about, because there's a lot of chatter about this. I want you to help me straighten this out for folks. Widely reported that you sold units of PSLV. This is the Physical Silver Trust. It's not really an exchange-traded fund. It's an actual trust with actual metal in it. Many took this as an indication that you had sold silver. There's a lot of chatter about this. What exactly is going on there, Eric Sprott?
Well, Max, that's totally the wrong interpretation that people should have made. As you know, we have to file to be a seller because we're a major owner. The units I got up to about a 22% premium to the underlying net asset value. We had filed, we had some sales. But as I've stated last week, every dollar of those proceeds went either back into the silver market, because fortunately we can buy silver basically at spot, and or it went into silver shares. We have been a net buyer of silver every day. I will be a buyer of silver today. I'll be a buyer of silver tomorrow. So we have not lost any faith in what's happened to silver. And if I may, I'd love to comment on what happened last week, and I'm sure you must have these same thoughts. But in my mind, it was just another one of those raids that we experience from time to time. It got bludgeoned in the very quiet hours of last Sunday night. There was no particular reason for it. And then we end up with 5 margin rate increases. It just reeks of somebody manipulating the price of silver down. And that's totally my attitude. I have no fear of silver here. Yes, it will be parabolic, but it's going to be way more parabolic than we have today. I've always thought that silver would trade at a 16-to-1 ratio in terms of price to gold. To make it simple, if we imagine gold at 1,600, that would suggest that silver can go to 100. I think it might even overshoot on the downside, maybe trade as much as 10-to-1. And the reason I think that is I believe that gold today is the de facto reserve currency. It's outperformed everything for 11 years. Silver has always been a currency. People are now treating it as a currency, much as you are recommending to people. And it's a very, very small market. There's no way that with roughly $50 billion of silver inventory around that we can make it a currency at these price levels. So I see the price going much higher. You
talked about the price action in silver recently. You described it as a raid. Now, let's talk about some of the specifics here, because people understand what this means. If you're talking about the fiat money world and the central bank world, they have an incentive to keep interest in paper versus metals. This has been an historic tension. So periodically, there's an incentive to try to keep metals as cheap as possible to get people more interested in paper. But how to specifically go through some of the bullet points of how a raid goes down when they attack silver and gold.
Well, I mean, Max, first of all, I base this on our experience over the last 11 years in the gold and silver markets. We get these very, very sharp declines. I think last week's decline was premeditated. It happened in the early hours of Sunday/Monday morning when markets weren't really operating. England was closed. China was closed. It was a great opportunity just to mark it down. And then, of course, in come the margin increases just as the price of silver is down $6, which puts everybody under stress. So I think it was very much orchestrated. One of the things that I think we should all look at is the trading of silver in the paper markets, which I mean the COMEX and the SLV. Last week, it probably averaged 1.2 billion ounces per day. There's only 700 million ounces mined in a year. There's only 33 million ounces of physical silver at the COMEX that's available for delivery by the commercial shorters. I mean, if something like 3% of the people who are trading silver, 3% in one day, demanded physical delivery, there'd be no silver on the COMEX. So I look at all these paper markets, and I just believe it's paper. It's guys pushing buttons who really have no vested interest in silver other than trying to move the price one way or guess which way the price is going. So I think the key market's the physical market. What are people doing in terms of converting their fiat over to silver and gold? And obviously that is has a lot of momentum today. And I don't think this raid is going to work, even though it was shocking last week.
Well, now you've done a lot of work in your newsletters and your research on the supply side of what really is above ground in the silver market, and you noticed that some supply was overstated or double stated. Correct me if I'm wrong, you're talking about there being approximately 1 billion ounces of supply, half of which are in ETFs. And some pundits last week were suggesting that, there's actually 18 billion ounces out there of silver. What are the true numbers, Eric Sprott?
Well, I don't know that there are good numbers, because most of the numbers that have been prepared for the silver industry come from a couple of sources, which we don't rely on because we think the data is misleading. And they always show the demand and supply of silver is balanced every year, which we know is poppycock. And we prove that the investment demand was way beyond the investment demand that these organizations were suggesting. So I, for one, don't believe any of the data. 1 billion ounces is the commonly referred to number. As you know, between the various ETFs and trust funds such as ourselves, you can easily account for 500 million of those 1 billion ounces, so they're really not available. And 500 million ounces at $40 an ounce is a mere $20 billion, which is hardly a lot considering what institutions could do in terms of moving into that market. And I might comment that, the institutions were slow to get onto the gold market. And, I describe some of the people who bought back in 2008 as Johnny-come-latelys because we already had an 8-year bull market in gold, but a lot of people thought it was the start of something. And, of course, the timing was good because of QE1. Those same institutions, I do not believe, are involved in silver to any extent. And I suspect that they will get involved with silver. And, of course, once they get involved with silver, there's going to be a horrendous shortage of silver. And Max, one further thing back to the raid. As you well know, the commercials are short silver. And I think it was just getting totally out of hand from their positions when silver was $50 an ounce. The margin they had to keep putting up. And that's why I think this raid was perpetrated. It was more to get the shorts off the hook than it was to reduce the speculation of the longs. And, we always characterize the people that are long as speculators. Well, what about the people who are short? That's an even more of a speculation when you realize that your losses are unlimited. So I think it was just like the way they nailed Bunker Hunt is what they're trying to do this time. But I don't think they're going to be that successful because there's so much interest worldwide in silver. Much of it a credit to you and others that have recommended silver, but it's a worldwide phenomenon. It's not one guy taking on the COMEX.
Right, good point. The speculating on the short side is far more inconsistent with keeping a fair and orderly market than any so-called speculating on the long side. Let me ask you one last question. I had the CEO of Endeavor Silver on the show a couple of weeks ago, and I asked him the question, what would happen to the price of silver if 1 million people bought an ounce today? If they took, 1 million ounces of silver off the market in one day, one swoop, one order, his estimate was, the market would have to immediately discount that as a phenomenon that would perpetuate for 365 days of the year, and you'd see a 30% markup in the price of silver immediately. That was his answer. So I put it to you the question. 1 million people buy an ounce of silver today. What happens to the price of silver, if anything?
Well, I think the more important thing, Max, is, what the big money does. I think it's important that individuals want to buy an ounce of silver, and almost anyone in the world can buy an ounce of silver. Maybe it's not 1 million people, but 1 billion people. But you got to appreciate that there's a lot of institutional money around. For example, we're going to be starting a mutual fund just for Canadians that will only buy silver. That hopefully will be tomorrow in Toronto. And we would expect a large flow into that fund, which in itself might buy 1 million ounces. So if we get these institutions that want to be involved in the silver market, it will be, I think, more significant than individuals, certainly more significant than 1 million individuals, but I think there might be more than 1 million people who realize that the writing's on the wall for the fiat currencies that would be much prepared to buy well more than an ounce of silver.
Yeah, but we know the markets are dominated by institutions. We know the institutional money is coming in. We know that the central banks are buying. We know that major hedge funds like John Paulson are the huge position in gold. But let's talk about that retail person, that 1 or 2 ounce buyer. I know that's not your target audience, but this goes out to the world of millions of people. This show goes, 200 million people over the satellite system. The point is, can we, through that 1 or 2 ounce buyer, at what point do they start to take over the price discovery? That's what I'm talking about. This huge army of people who are disgusted with the fraud in the banking system.
Well, Max, I have no doubt that people are doing that already. So, for example, I mentioned that we have a website called SprottMoney.com where we sell small amounts of silver to Canadian investors, Canadian retail investors. And I've always encouraged anyone who could to either buy gold or silver as an alternative to fiat currencies. I think that the audience is much larger than 1 million, and when you see what's going on in China and India, where they have many billions of people who apparently line up every day to buy gold and silver, it's going to be a big factor in the silver market. There just is not a big surplus of silver, and when you bring in the marginal new investor, it'll just exacerbate the shortage that I believe we already have.
All right, Eric Sprott, we'll have to leave it there. Thanks so much for being on the Keiser Report.
Okay, Max, my pleasure. All the best to you.
All righty, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Eric Sprott. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.